Hello, everyone. Welcome to another episode on Stockertim Special. Today we have a topic and also a new company coming into the stock market. Boxable, the collapsible and movable home company, is planning to actually launch its business, by listing on the Nasdaq Stock Exchange, the tech-heavy stock exchange. And the question is this a bubble in the making? Because this company is not going through the traditional IPO, which is initial public offering. They will be launching the company listing. They will be listing rather via a special purpose acquisition company, which is called SPAC. And SPACs are very, very notorious for losing a lot of money for investors, a lot of shareholders in SPAC companies or companies that are listed via SPACs. They've actually lost fortunes, and some of those companies have even delisted or no longer viable as a company. Many of them have filed for bankruptcy. Numerous example which I'm going to mention, but this is not just going to be a negative review of Boxable, which will be listing under the ticker symbol BXBL. It's not just a negative review of the IPO, it's just everything you need to know as an investor. Is this something you should be investing in or not? So just join me. But as a disclaimer, every information shared on this channel is for education and information purpose only. Do your due diligence or consult your financial advisor before making any decision. On that note, give this video a like, subscribe to our channel, put your notification bell so that you don't miss any episodes that will bring your way. So let's jump right in. So Boxable is planning to actually list, like I said, on the Nasdaq Stock Exchange via a special purpose acquisition company called SPACs. The merger announcement, which was done a few days ago, Boxable said it would be merging with FG Merger 2 Corporation, and is actually about $3.5 billion deal. The FGMC merger is going to actually see Boxable being issued about 350 million shares. 350 million shares of FGMC will be issued to Boxable, which will be available for anyone buying into the SPAC. There is also no minimum cash positions or cash condition, so it doesn't require any cash condition, which is something. Is also something that anyone buying this SPAC should actually be watching after. Now, the most important part of this whole merger, SPAC listing, which is not an IPO, and I'm going to just touch a little bit on the difference between a IPO, a SPAC listing, or even a DPO. So IPO is a company actually issuing its shares for the first time, and they don't do it directly. They do it through underwriters who are majorly investment banks, capital markets, underwriters and all that. They guarantee minimum purchase, and these shares is now listed, and other every other investor can then buy that on the stock exchange. Direct public offering, or DPO, or direct listing, is when the company doesn't go through any intermediaries or any investment banks. They basically just list the shares directly. However, SPACs are majorly not necessarily an IPO, not necessarily a direct listing, but basically companies who are called blank check acquisition companies. These companies just, they don't actually offer any service, they just list themselves, and they look for an actual company that is existing in the real world to acquire or merge with to become a public company. And the people behind the SPACs then get a fee for actually making that transaction successful. That's exactly what Boxable is doing. So why is Boxable opting for a SPAC instead of an IPO or a DPO? I'm going to actually break it down. But let's go to the financials of Boxable. And before I do that, please give this video a like this video, because more people will actually see this video to be more valuable to them. Subscribe to our channel as well. Now let me go on. So Boxable actually posted about $3.4 million in revenue in 2024. Yes, it's not too much of a revenue. It's it looks very tiny compared to every other company that has actually gone public, and but on the positive side, this is a company that already has some revenue. So a lot of SPAC companies don't even have any revenue. They've not even actually started selling their product. Look at Lucid. Lucid hasn't even started making any revenue when it actually merged with with Churchill Acquisition Company, and that was the SPAC company that Lucid matched with. So they already have $3.4 million in revenue as of 2024. It was a 10x jump from the $344,000 in 2023, but it's still very tiny and very insignificant with a $3.5 billion valuation that the company will be listing as on the Nasdaq. The net loss is quite significant as well. The company had a net loss of $39 million in 2023, and that net loss actually rose to $42.9 million as at 2024, the first 9 months of 2024. We don't have anything for 2025 yet, but at least you have an idea of what's going on. So the gross margin are strongly negative. As a matter of fact, it's so huge. Let me just say it as it is. It's 2,968.6% negative gross margin. They have a whole lot of issues, ramping up production, regulatory delays, which some of the headwinds that you actually need to pay attention to if you are investing in this company. Cash position for this company was about $18 million. They had several crowdfunding and investment from over 50,000 investors. They also, on the cheeky side, have Bitcoin in their balance sheet. So, is that an upside? Is that just to actually have, jump on the trend of Bitcoin treasury or companies having Bitcoin on their balance sheet? Is here to be seen. The next thing I will also want to touch on is the business model, which on one angle is a big positive. It's something very innovative. On the other side, it's also very tough for a company like this to scale. And I'm going to just break it down. So, Boxable actually just develops foldable, as you can see, foldable modular homes that can be, produced in a factory, moved with, not too larger than life trucks, and they can actually be deployed anywhere, especially when it's already pre-planned and it's already pre-ordered or pre-built for a particular part of a particular taste of the customer. So they have this flagship product called Casita, which is about 361 to 375 square meter studio kind of a house. They have this direct to consumer approach, so they don't actually go through any home builder or any intermediary. They just deal directly with the end consumer or the home owner that actually orders for the product. But that is also part of the challenge that the company is now facing, because there's so much pent up, not necessarily anger, pent up criticism that Boxable has been facing from people who have ordered homes, thousands of people, and I'll be getting into that. But scaling this company has been a very big problem. The company is looking to actually scale its production so that it will be able to actually meet a whole lot of orders that is unfulfilled. Valuation wise, like I said, $3.5 billion. I know for a company that has over $42 million in losses. If you actually look at this valuation, it's about 1,000 times what exactly Boxable will be doing in future earnings. So SPACs also have very not too good history, not too good reputation when it comes to coming into the market with companies who are already set for failure, or companies who are already not going to actually succeed maybe the next 2 to 3 years. Many of the SPAC stocks or companies who listed via SPACs, they've lost close to about 90, 80, 100% of their valuation. I'll get into that shortly. So sparks have actually left a bad taste in the mouth of a lot of investors, especially retail investors on Wall Street. Retail investors, the you and I, everyday person. Lucid has lost more than 80 to 90% of its value. Fisker, which was a sustainable electric vehicle company, has gone bankrupt. Is delisted. Everything is lost with the company. We had several companies that listed via SPACs, especially during the post-COVID pandemic, reopening era when we had that SPAC boom. So there's also specific problems that this company actually has, and it's not necessarily that Boxable has something unique or they are the only company in this business. They have there's also a company called Blockable. They actually provide a modular multifamily kind of homes. We have Connect Homes. They have prefabricated homes, custom builds kind of products. We have Factory OS, another company. They have modular apartments, majorly for developers who are actually looking to scale their home building activities and business. We have Mighty Buildings. This company very very also unique in their own right. 3D printing homes. Plant Prefab is also green modular homes, and Boxable itself, more or less like a foldable kind of direct to consumer, not dealing with any third party, and that is exactly part of the challenge that Boxable has been having. I personally would have preferred this company to actually work with developers, which will also be a net positive. So yes, they might actually want to more or less manage everything end to end, but if you don't have production experience, if you don't actually have the experience to scale manufacturing to a level where you can actually take on huge demand, huge orders from customers, it's going to be very very hard for you not to have this kind of problems and having a very negative review from a lot of people who actually believe they've been dealt not something positive by Boxable. But is this a bubble in the making? $3.5 billion is yet to be seen. Personally, I wouldn't be buying any SPAC company. That doesn't mean Boxable might not turn the corner. That doesn't mean Boxable might not actually have what it takes to scale its production. But it's yet to be seen because SPAC mergers don't necessarily provide a whole lot of disclosures. They don't necessarily provide a whole lot of information or even very detailed, filings that you are actually going to look at, and you'll be able to have an idea of what this company actually does and how they make money. SPAC companies oftentimes end up, presenting their first quarter or any of their next quarterly result after listing, and you discover the company has almost nothing in revenue. The company has lost much more money. The company might actually be in a more precarious financial position. So I want to see a situation where Boxable starts making announcement on how it wants to change its business model, especially scaling up production, scaling up the ability to be able to actually meet up with over 100,000 unfulfilled orders. So how many homes have been delivered? I think less than 2,000 homes have been delivered, and the company has taken over 100,000, if not more, orders from the general public, and a whole lot of people have funded this company through crowdfunding. And one of the reasons why I'm not a fan of crowdfunding, something like this, it leaves a bad taste in the mouth. But at the end of the day, Boxable will be listing. Is this something you're looking to buy? Personally, that's my opinion. I've just shared. Do you agree with me? Don't you agree? That's why we keep on bringing you all these ideas on how you can actually understand what happens in the stock market, how you can make money in the stock market from a reliable strategy, from a reliable approach where you don't necessarily gamble your money away. You try to build your portfolio. You are not just running after making money. You are building your knowledge base. You are building your awareness. You are building your capacity, your skill, your ability to be able to understand why businesses succeed, fail, or why businesses actually turn the corner, or why a lot of businesses don't end up, succeeding at the end of the day. And that's why the stock market really is the litmus test for any company that wants to succeed or not. So that's why I'm also inviting you join our community, Stockertim Premium. Will bring you premium newsletter that brings you investment ideas, gives you the education, the knowledge, the analysis that you need to make informed decision. It's not regulated advice, not financial advice. Basically, more of coaching, guidance, and giving you the education you need to actually succeed as an investor. So until that time when I bring you more updates on other ideas, other companies listed in the market, keep investing, keep growing. Take care, and bye bye.